All right, Chris. Thanks for coming.
Absolutely.
Welcome. This is for our class in Entrepreneurship and Finance at the Carey Business School. And we have Chris here, an entrepreneur and investor at the same time. Chris is an engineer in training, and he's an interventional radiologist, meaning he's a medical doctor as well. Welcome, Chris.
How you doing?
Very good.
Excellent.
Very good. So tell us a little bit about how you started your ventures.
Sure. So I've had several adventures through the years. Notice I don't say ventures, I say adventures.
Adventures.
All right.
That's what they are.
You know, that's what they are. So with that said, I've actually had multiples of these. I'm actually on my fourth company now.
Right.
But the short answer is the first two were more like failures, but until you got to crawl before you walk.
Right.
All right. So with that said, let's go to the ones that will be a little more interesting to talk about. The first one that became commercially successful was the American Bone Cement Development Company.
Right.
And so that was my first business venture that was really successful on a commercial basis, where I was able to take the technology and the product that we developed while I was at the Medical College of Georgia, and ultimately turn that into first a product, and then second to actually sell that technology to, in this case, the Stryker Corporation.
Right, so you were able to develop intellectual property in there.
Correct.
Dealing with medical science.
So specifically what we did was I was a materials engineer. That's what I did as an undergraduate before I got additional training in engineering. But with that said, we were able to take a proprietary group of products, right? These are basic minerals like calcium hydroxyapatite, the mineral component of bone. And we were able to use additional things called sodium and amorphous peroxotitanate nanoparticles, which would go into the cement, which allowed us to tune the mechanical properties. Why is that important, and why am I talking about this in terms of business? Well, the reason why is that vastly increased the addressable market that our product could be used for. So instead of only having a very narrow FDA indication, when we actually went to full market, right, with FDA approval as a type 2 medical device, we were able to address a much larger segment of the market, a place that no one else could go at the time. We were actually licensed to be used in both the axial and the appendicular skeleton. At the time we made this, no other product in our class could actually be used in the axial skeleton. It gave us a market no one else could touch.
Okay, so you had you have an advantage. You had an advantage over all other companies.
And so we had the reason why our intellectual property and our overall process was so useful, and what allowed us to compete with companies hundreds of times bigger than us, Medtronic, Stryker, you can talk about Arthrex in the same category. Why could we compete against billion-dollar companies? Was because we had the ability and we had the patent and intellectual property protection that allowed us, in a combination with an FDA indication, that no other product, whether that be Bone Source, whether that be Hydrojet, whether that be any of the other simplex feed products that were out there from Stryker at the time, that gave us a protected market and a much larger addressable.
Now, you told me that you sold that to a Stryker. Stryker eventually bought the company from you.
Correct.
Now, since you had a larger addressable market,
Yes,
and a patent technology, were you able to pitch that to different companies? Any different companies wanted your product?
absolutely. So we actually, the way I like to describe this is we sort of created, in the process of the sale, we created what is called like an auction house. What that basically means is I actually had, at the time we had 4 different companies more or less bidding for our different pieces of intellectual property. And so we actually had, by the time we sold, 3 different product lines, all right? And we actually ended up selling 2 of those to Stryker and 1 to Medtronic.
The 2 largest medical devices company here in the United States, and probably the world. Very good. So now you're telling me you used that leverage, you used the cash that resulted from that investment?
Correct.
And now you're moving on to green technologies.
Correct.
Tell us about your company,
Green Business
Development LLC.
Yes. So basically we took the capital from there, and admittedly, as you can imagine, the investment market here, not just the equities market or the bond market, but the overall investment market through the tremendous turbulence of COVID has presented us with probably once in a lifetime, but certainly and hopefully once in a generation opportunity. What is that? Well, we've seen a tremendous move especially on the residential side, to move to solar. What I like to call electrification, right? Whether that be from Teslas as cars that we drive, whether that be as the solar panels on our houses. But one place you haven't heard much about that development is on the commercial side. Meaning that the commercial buildings, the quote-unquote skyscrapers, still really haven't touched that market. That is what we've been focused on primarily, is to put together integrated solutions. Because remember, unlike your house, the power goes out of your house, it's inconvenient, your refrigerator goes off, so be it. If you've got a company that's absolutely dependent on, say, high-frequency stock trading, if your power goes out, you are in a very, very bad way. All right? And so as such, you need to have a combination solution that's integrated, not only battery technology, you're going to want to have solid oxide fuel cells in addition to your panels of solar. Why do I talk about all this? The reason why I'm telling you this is because you have to address all of your customers' needs. What do we talk about in that regard? Again, addressable market. There's a really big addressable market. Why? Every company out there today wants the press and the publicity to say we are, from top to bottom of our organization, striving to be a green company. All right? And that is something that has allowed us, especially in the commercial side, all right, to retrofit existing buildings. Obviously, that is a challenge, because as we do that for buildings that were built 35, 40 years ago sometimes,
they don't have the infrastructure.
They don't have the infrastructure there. The other part is if that is where the company is based for that particular skyscraper, let's imagine they have 26 floors, all right? I can't shut down the entire building to retrofit it for green energy. I have to do this in a staged, stepwise fashion.
Right.
And that's the key part of how we work with our suppliers and our customers.
Tell us, or tell the class, how did you decide to invest in green technology?
Sure.
Tell me the three major factors that told you.
All right, so one is, again, as I talked before,
right,
the overall addressable market. The addressable market for me is the number one thing. How big a market are we talking about? In this case, it's a huge market, right? The second part is the velocity. How long is it going to take me to get into that market, and how long is it going to take me from the time that I decide that I want to start this venture to first have an actual contract with a customer, and then from that point, how long is it going to take me to deliver on what I've promised? All right? And when I put those together, those are the three most important factors, all right? And once you get beyond that, there's going to be some other things that are going to be very important. What's my margin? How long is it going to take me to get product from my suppliers? How am I going to, get the people in position to be able to execute on what we're contracting?
Now, different markets and different technologies, different segments have different addressable markets.
Absolutely.
And they different have the speed to break-even point.
Sure.
So in this particular segment, the green technologies, what are you looking at? Because we can say 5 years or 3 years.
Sure.
What's the reality on this market?
Okay, so the reality here is everyone wants to sit there and snap their fingers and be break even or profitable tomorrow. That's not reality.
That's not reality.
Especially when you're talking about retrofitting buildings that are somewhat older, it's going to take you some time. All right. In our case, specifically for us, it took about 3 years. It took about 3 years to reach. Not when I say not break even, I'm talking about repeated month over month, quarter over quarter, year over year profitability. Okay.
Profitability. Not even breaking even.
Not even breaking even. So it took us, because of the way the different green tax credits and some of the other things are out there, that allowed us to actually reach relative break even on a month-to-month basis. All right, and I say month-to-month, but truly year-to-year as well, because if you're break even every month, you're going to be break even for the year. All right, but the answer is it allowed us to do that after about 18 to 24 months.
Okay, tell us about where are you located and where are you planning to expand in? I know you say Atlanta,
yes,
and you're trying to expand here in Maryland.
Sure.
Tell us about that.
Okay, so we were based out of Atlanta originally. All right, that's where I'm from, what have you. So that's what I understood as the initial market. All right, so that's where we focused initially. But to answer your question is this: we first focused on the Georgia market because the business climate there was very conducive, as well as the overall push from the governmental side, especially with green tax credits, etc.
Right.
That has lagged a little bit behind here in Maryland. Okay, they've been very good on the residential side, but not so much on the commercial. That thankfully is changing. So around 14 weeks ago, when you get into the subtleties of some of the legislature and the government and the governor of what's been signed, 14 weeks ago, they finally got to the point where the size, scope, and overall ability to address those green tax credits has taken root here in Maryland.
Chris, that's very surprising, because when you're talking about the green technologies, that's some movement that even the federal government is pushing along.
They are.
Since the Obama administration.
Yep.
Maybe it got stagnant during the Trump administration, but I think Maryland is taking over, and Maryland is putting some credits in those green technologies.
And they absolutely are. So 14 weeks ago, that's where they really increased it almost threefold. All right, I think it's like 2.8-fold in terms of the available credits for businesses, and especially for those of us in the professional. So with that said, that's why we're hoping by the end of next week to actually have our first customer closed here in the
What that means for you? What that means for you? The credits from the government, is that tax breaks, or is that money grants to you?
So in this case, it's not grants. All right.
Okay.
So I specifically very much shy away from grants. Grants almost invariably come with certain commercial strings attached, which I'm not comfortable with, and reporting requirements, which are fine if you're a much larger company, but I don't have the back office manpower to respond to FOIAs and other things that come along with grant money. So it's more on the tax credit side. And so I look at it like this. Remember, as we all know, right, profit margin tells us how well we control our expenses. All right, that is our DuPont model classic, right? Well, those green tax credits allow me to control my expenses, because I can now basically write down a number of my input costs. And in so doing, that is going to allow me to focus on the thing that is the most important to me, which is net margin.
Net margin. Obviously, your profitability levels are going to be much better. After the tax breaks, and after you.
The way I look at it like this is, for me, I don't even think about it in terms of profitability. I think about net margin. Because if I've got good, strong, positive net margin, right, that means that overall, after everything's said and done, for each transaction I have, with each customer I have, if I'm making a strong net margin, all right, that means that I'm making money.
You're making money. And when are you looking to come here to Maryland? You said that the law was going to be signed in August.
Over 3 months ago. It comes into effect on August 1st. So part of the reason why I was late here today was a couple of our suppliers wanted to have a meeting regarding the next project that we're hoping to start. It'll either be late third quarter or first couple of weeks of the fourth quarter of this year here in Baltimore.
Well, thank you for coming, Chris. I appreciate it. Thank you so much.
Absolutely.
This is for the class, Entrepreneurship Finance. Thank you.